This is an emergency update. Silver is breaking its own rules. Inventories are collapsing, delivery pressure is exploding, and the paper market is losing control. When price detaches from physical reality, it doesn't correct. It snaps. February could be the moment silver reprices violently. Boring currency hair. This channel tracks what's happening beneath the surface. Physical metals, paper market stress, and the forces reshaping the global financial system. This is an emergency update. I don't make videos like this lightly. I've been covering silver for years. I've called rallies. I've called crashes. I've warned about manipulation. But in all that time, I have never said this. Silver is going to $200 this month. Not next month. Not later this year. February 2026. I know how extreme that sounds. I know the skepticism this triggers. But I'm not asking you to believe me. I'm asking you to follow the math. Because what's happening now is no longer opinion or sentiment. It's structural failure. Four forces are converging simultaneously. Each one alone could push silver 30–50% higher. Together, they create a pressure the paper market has never faced. The first and most important driver is physical decoupling. As of January 31st, COMEX registered silver inventories stand at 14.2 million ounces, down from over 32 million just 6 months ago. At the same time, open interest represents roughly 580 million ounces of paper claims. That's more than 40 paper ounces for every real ounce. In February, a significant number of contracts are standing for delivery instead of rolling forward. Estimates range from 5 to 8 million ounces. But the amount of truly available, unencumbered silver may be closer to 3 to 5 million ounces. The inventory simply does not exist. These delivery requests are not coming from retail traders or speculators. They're coming from industrial users and sovereign entities that require metal, not cash. If COMEX cannot deliver, it faces 3 choices: absorb massive losses sourcing metal elsewhere, attempt cash settlement that buyers will refuse, or declare force majeure. The moment force majeure is declared, confidence in the paper market collapses and physical prices gap violently higher. The second driver is industrial panic. Silver is no longer just a monetary metal. It's a critical input for solar, EVs, AI infrastructure, electronics, and defense. Solar alone consumed nearly 580 million ounces last year, and new cell technologies require substantially more silver per unit. Industrial demand is rising at the same time mine supply is constrained by declining output, export controls, and geopolitical risk. When manufacturers realize they may not be able to secure silver later, price stops mattering. They buy immediately to protect production. That behavior creates explosive nonlinear price moves. The third driver is the gamma squeeze. There is massive call option open interest between $100 and $150, expiring late February. If silver rises back above $100, market makers are forced to hedge rapidly by buying futures. That buying pushes prices higher, triggering more hedging in a feedback loop. This exact mechanism already drove silver from $80 to $130 in January. With expiration approaching, the next move happens faster and more violently. The fourth driver is geopolitical shock. The US dollar is under pressure, deficits are expanding, and trust in traditional safe havens is weakening. Any disruption, a debt ceiling crisis, mine shutdown, trade restriction, or regional conflict forces capital into hard assets. And silver, with the tightest supply and highest leverage, reacts the hardest. Each of these forces alone is powerful. Together, they compound. This does not mean silver won't correct after the move. Parabolic moves always do. But first comes repricing, and repricing happens suddenly. If you own physical silver, understand this. Selling at paper prices while replacement cost is far higher is transferring value away from yourself. The volatility ahead will be extreme, but the underlying structure is broken. This is not hype. This is not emotion. This is math. February is the convergence window, and when it closes, the price will already be gone. $200 silver is no longer extreme. It's the consequence of a system that no longer works.